Hey everyone, I've been following an interesting story over the last 5 years or so, and that is the case between Tesla and Netflix. I see these two as similar in that they're not, of course, they're not similar companies, but similar in that they both entered industries as outsiders, developing innovative technology that consumers did not fully understand or fully adopt just yet, right? Netflix with the streaming technology and Tesla with electric vehicles. And when they first started out, competition in their relative space was limited. There wasn't very many companies doing streaming when Netflix was doing streaming. Same with Tesla. They were almost allowed to grow and expand unhindered because legacy companies like, for instance, Ford and GM were watching Tesla to see how it develops before they decided what they wanted to do. Similarly, with Netflix, companies like Paramount and Disney and others were just watching to see how Netflix develops over the years before they decide to make the switch over. However, starting around 2019, competition absolutely soared, interestingly, right around the same time for Tesla and Netflix. That's right around when EV started to really increase in production worldwide and streaming services started entering the fray. And so you had many, many more streaming services. And then, of course, all of the competition really exploded in 2020, 2021, and 2022 when streaming participants really just went all in and EV companies started joining, increasing production. New EV companies like Rivian and Lucid that didn't exist before. And then you had companies like Ford and GM and others ramp up production of electric vehicles and really increase competition significantly. But what really is interesting to me is the different strategies Tesla and Netflix employed against the competition. What do I mean by that? Well, you're probably all aware, and it's been very publicized, that Tesla's been cutting prices aggressively all year long in response to the rising competition. Most recently, Tesla cut prices on the Model S and Model X, and these are now priced significantly lower than they were a year ago. And then with the incentives ending, the government incentives ending in 2023, there is rumors that these price cuts could go even further. That being said, Netflix took the opposite approach, right? Netflix has been increasing prices aggressively over the last several years. And the price increases started in 2020, right when competition really started coming in. And they just kept it going, right? They've just kept increasing prices. And so, what's interesting to me is which one of these strategies will end up working out better in the long run. Of course, it's too early to determine which one of these strategies will work in the long run, whether or not Tesla's price cuts put some of its competition out of business, or whether or not Netflix's price increases helps its competitors survive for longer because it's going to increase prices industry wide. That all remains to be seen. But for now, Netflix and Tesla, which when they were growing unhindered for all of these years, their revenue expanded from a little like $1 billion company to now Tesla's has absolutely exploded to $94 billion revenue and Netflix at 32 billion in revenue. And while they were growing unhindered, they were also expanding their profitability, both of which reaching very nice profit margins. Netflix surpassing operating profit margins of 20% before competition really started to bite and operating profit margins have come down. And the same with Tesla. It was growing unhindered and operating profit margins expanding. But now with the price cuts, its operating profit margin is falling as well, 13.49%. With Tesla, I wouldn't be surprised if its operating profit margins falls further as it continues cutting prices. With Netflix, it looks like its operating profitability is rebounding and moving higher because remember, it was increasing pricing and lowering content budgets, and overall, the industry competition is now lowered. It's not as aggressive as it was at the beginning of 2019, 2020, when many of its rivals came in at introductory pricing. And maybe following the lead of Netflix, everyone has started to raise prices and cut content budgets. And so industry wide profitability is improving quickly in streaming, whereas it just keeps getting worse in the electric vehicle industry. So right now we're right in the middle of these competitive forces, and it's yet to be seen in the long run which one of these two strategies will work out. But for now, it looks like Netflix's strategy of taking in the competition and sticking to its strategy, raising prices, sending a signal to the industry saying, we're not going to race to the bottom here on prices. We're going to raise prices so that you all can get the message and say, okay, let's increase prices too because Netflix is increasing prices. Whereas with Tesla, when it started cutting prices, of course, its competitors started cutting prices. And so they're all at lower prices now. So competitively speaking, Tesla purchasing a Tesla is similar in comparison to purchasing a competitor's car when you're looking at price right now because they've all cut prices. So for now, it looks like the strategy of Netflix is working out. But if you fast forward 5 years from now and some of Tesla's competitors have gone out of business and Tesla has been able to follow that up with increased sales, increased prices because now it's not facing competition anymore, then we might look back at these times and say, wow, Tesla was a genius there taking that price cutting strategy, and then Netflix was perhaps misguided in allowing the competition to jump in without cutting prices to force them out. So it's been really interesting for me to follow this, and I'm going to continue following this for the next several years to really look at which one of these strategies wins out.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.